Let's move on and talk about Syngene. They've reported a good set of Q4 numbers, margins at a 4-quarter high, revenue growth at 31%. Jonathan Hunt, the CEO and MD at Syngene International, is with us on the show. Jonathan, afternoon. What led to such a strong growth? 31% growth on the top line in Q4. In FY23, you've clocked in a revenue growth of 23%, higher than your own guidance of high teens revenue growth. Where did the surprise come in from, and what can you guide for FY24? Can we see a 20% plus revenue growth?
It was a really good end to the year. Fourth quarter was busy, strong trends. Actually, I think to understand the fourth quarter, you've really got to go and look at the trends that were visible throughout the year. Our business neatly splits into two halves: research services and development and manufacturing services. Both of those have done well during the course of the year. We upgraded our guidance at the first quarter, and then we've really seen a good steady momentum build on both sides of the house throughout the year. Things I'd point out: we've seen a lot of clients on the research side really think about how they can catch up on some ground that they felt they lost during the pandemic. Remember, many of our clients are pharmaceutical companies. Their innovations are patent protected. That means there's a time-bound nature to them. They really got to make sure that they get through the research development stage as quickly as possible and preserve that patent time. So they've got every incentive to try and catch up if they can. That's led to, I think, some healthy demand, particularly in chemistry. We saw that through the year, really built up towards the end of FY23. And on the development manufacturing side, that's more strategic. FY23 was a very good year for us in terms of progressing against our strategic investments. We've been investing for a number of years now in manufacturing, particularly biologics manufacturing. We signed what I think for us is a marquee deal during last year with an animal health company, Zoetis. They're a world leader in what they do. And that came on stream in the fourth quarter, and that helped lift the fourth quarter performance up above 30% year-over-year growth. So a little bit structural, a little bit strategic in terms of the things that are driving us, but it positions as well for the year ahead.
And then good afternoon and congratulations. Good showing. You promised high teens, you delivered early 20s, so obviously the stock market is quite happy. But what about FY24? What kind of a revenue growth guidance are you going to give? And do you believe you're going to be a little bit conservative yet again, under promise and over deliver? Is that the mantra? And also the Zoetis deal that you were talking about, how much will that contribute? As you've been mentioning, it has a potential of $500 million going ahead. But what kind of contribution are you looking at in the near term?
Yeah, no, I mean, the guidance is, we call it as we see it. We've given an outlook for the year ahead of high teens again at constant currency. Remember, of course, last year, some of the benefit was a currency benefit. Most of our contracts are priced in US dollars. The US dollar strengthened a lot more than most people expected during the last year, and that therefore lifted when we report back in rupee terms. But high teens growth for the year ahead. I think it's a continuation of the same sort of trends, certainly growing stronger than the industry we're in, stronger than the GDP numbers you're seeing around the world. So positive outlook for us.
High teens revenue growth for FY24. That's the guidance. How much did Zoetis deal contribute this quarter? And how much do you think it will contribute next year?
Yeah, there was an impact in there, but we're in startup mode. We haven't called out the specific numbers, but we had sort of a positive impact in the fourth quarter. I look forward to a full year impact of that, and that's baked into the guidance. So the high teens includes an expectation that we're delivering well and we're being highly productive every month of the year for Zoetis in the year ahead.
Numbers you can share for Zoetis?
I'm sorry, you broke up.
Any numbers you can share?
No.
How much will it contribute?
Yeah, no. I think the answer to that is no. We don't break out individual clients or individual products. It's baked into the overall guidance of the firm.
All right. What about, operating leverage and margins? What kind of a guidance can you give us on that front? Teens we have noted in terms of revenues. What kind of a margin band should we look at?
So I think the margins, the operating EBITDA level for the year, maintaining what are already very good margins by industry standards, little bit of an uplift. FY24 was a little bit above, FY23, sorry, was a little bit above 29%. I can see that drifting up towards 30% in the year ahead. And then PAT growth, mid-teen growth as well. Of course, we've got a structural headwind when we look at profit after tax. Many of our operations are in special economic zones, and those, as you know, are time-bound tax benefits. We're coming out of those. So the next 1, 2, 3 years, it's well understood by the street. We have a structural increase in our tax rate as we lose the SEZ benefits. But even with accounting for that, I still expect mid-teen growth in PAT for the year ahead.
Okay, we'll leave it at that. Jonathan, thank you very much for joining in. That's Syngene, which is racing away in trade. Stock is up close to about 4%. Laura